Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. We are about 3 weeks away from the Planet MicroCap Showcase Virtual on December 6th through 8th, 2022. On day one of the event, we'll be hosting the first ever Stock Pitch World Cup, 5 global areas, 5 moderators, 20 total stock pitches. Joining us to moderate each special session is Maj Soueidan, representing the US, Paul Andriola, representing Canada, Fadi Diab, representing Australia, Jason Hirschman, representing Europe, and Kelvin Sito, representing Asia. The only way to see the Stock Pitch World Cup is by registering now. And then on day 2 and 3 will be presentations from microcap management teams, as well as one-on-one meetings. Attendance for the virtual is complimentary for investors, and registration is now open for our virtual events. So to join us, please visit www.planetmicrocapshowcase.com. Now, for this episode of the Planet MicroCap Podcast, I spoke with Vanck Zhu, full-time private investor. Prior to becoming a full-time investor, as well as working at Etsy, Vanck previously covered the freight transports sector on the sell side and parlayed that experience and launched a substack called Planes, Trains, and Trucks. Even though he hasn't updated his substack for a little bit, he has a wealth of knowledge about the space and thought it'd be interesting to learn more about the freight transports sector. He also happened to compete on season 29 of The Amazing Race. So I guess it's all very appropriate that not only did Vanck compete on the reality competition show around traveling, he covered the travel sector, albeit on the freight side, for a living. Thank you again for tuning in to episode 250 of the Planet MicroCap Podcast, and please enjoy my conversation with Vanck Zhu. This episode is brought to you by Stream by AlphaSense. You can find them at streamrg.co/PMC. That's STREAMRG.co/PMC. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream is unlike any other transcript libraries. Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.co/PMC. That's STREAMRG.co/PMC. Thank you for joining me today. How you doing, man?
Pretty good. How about you, Bobby?
Oh, it's actually raining in LA, dude. It's very strange. We all don't know what to do with ourselves.
Huh. You can't go dancing, singing in the rain or something like that?
I mean, I guess you could, but then again, like I would have to have had the awareness of that's what you're supposed to do in the rain. I don't know these things. I'm in LA. This is very strange. But listen, man, this is thanks again for jumping on. We've hung out quite a few times at, various microcap club leadership summits, obviously long overdue again, I sound like a broken record. I sound like a broken record being a broken record saying that it's been long overdue. So here we are again. I'm doing that. And I'm excited that you're joining me on here. I mean, we've bonded over just microcap investing, some of the crazy, wacky, fun stuff that we see out there. And, I thought it was time for you to jump on here and let's dig into some of that. So, for those that may not be following you or have heard of you as a full-time investor and former contestant on The Amazing Race, love to hear your background and how you got started being passionate about microcap investing.
Sure. So as an investor, like my dad, actually, I think a lot of us, like our parents got us involved. So my dad always looked at the markets from when I was very little. So I remember sitting on couch going watching these squiggly lines on Louis Lukaiser, I think it was. I can't remember now. But so that's kind of where I got started. Had an idea once I graduated college, I wanted to do finance, but it was still coming out of a great recession, so it wasn't really the best time. So had a kind of a mixed, interesting career that's not necessarily standard investment banking. So did a little mix of like actual consulting and then broke into sell-side equity research covering freight transportation. Did 2 years at a distressed hedge fund, and then afterwards decided I kind of wanted to focus more on investing in really small stuff myself, and then joined kind of more of a corporate strategy, like corporate analysis. Right now working analytics at Etsy. And so that's kind of how I transitioned my career progression. So
for sure. You and Chris, man, also a guest on the show at JJ Shipley, right? That's awesome.
Yeah, great guy. Yeah, we sit really close to each other. We talk about stocks. Quite a bit after hours. Yeah.
Oh, that's awesome. But how'd you get to the small stuff, man? I mean, obviously you're kind of probably covering the big stuff on the freight transportation side, but how'd you find us?
Yeah, so I mean, I started really like looking at the large stuff, but I realized, I think a lot of people realize, the small stuff is where, sometimes you're the only one looking at a stock. Like sometimes people forget about things, and you can find stuff that 5 to 10 bags. You can do it in a larger cap space as well, but it just feels like there's more of it in the nano cap, micro cap world. So that's kind of how I turned myself there. It's not like I'm exclusively focusing there. Now I'm actually looking a little bit larger cap as well. But yeah, it just that's how I transitioned from really large stuff and then went to the really nano cap stuff. And now I'm coming back a little bit towards more of a middle ground.
For sure. All right. So I want to hit on one other thing too, having to do with your background, is that's covering freight transportation side of the business and that sector. And I just find it hilarious. We were talking about offline how you covering that and also having been a contestant on The Amazing Race, like, of course. So, tell us a little bit about that experience. I know you had a Substack. You haven't been updating very recently, but, tell us about that experience and why that really interested you.
Yeah. So I guess 2-part question, right? I guess we'll address the TV show first. TV show is fun. I applied with my good friend of mine. He actually didn't get in. I got in. It was just like a once kind of I watched the show, big fan, once in a kind of, lifetime kind of experience. And just like, go for it. Great experience. I mean, it's also in general, my mentality towards life is I want to try different things. And that was definitely, on the outside of of a typical numbers guy investing, like running out seeing the world. So that's kind of the TV show. It's a little interesting that you say, it's I also do cover freight transports, which is the movement of physical goods, not necessarily humans, to different places for tourism.
Transportation. It was the transportation.
Yeah, broadly.
Yeah. Okay.
Planes, trains. I got where you're going with though. Yeah. So so that part of the world, it was just. I mean, I always loved trucks going up. I mean, I guess like a lot of young boys, it's like, oh, trucks, trains. That's so cool. And that's kind of like the sector I was always super interested in. As it happens, it didn't really tie into TV show because we were really it was really like a very specific set of skill sets there, whereas covering freight transportation, you're more like running like supply and demand. I don't think we ran any pricing analysis while we were on Amazing Race, but on freight transportation world, we're focused a lot on like supply demand, industry dynamics, stuff like that. But yeah, I just always loved like transportation. I guess I always loved travel and understanding, like looking at the world broadly. You can see there's like a world map behind me. So it's always kind of, I guess that's how the two ties together.
For sure. By the way, for those that didn't see your season, how far did you get?
I don't think I should. I should spoil it. Yeah, I don't think I was. Okay, all right. I'll find out. I'm just gonna let the viewers figure it out. Yeah, I don't know spoilers here.
Okay, all right. So I'll rephrase it. What was your favorite stop I watched The Amazing Race too. I love that show. But what was your favorite leg that you were able to participate in?
I mean, Norway was just gorgeous. It was like we went there. It was during like polar summer. There was no like the sun never set. I just remember like afterwards they housed us in tents. We just hung out in tents, drinking the local liquor, and yeah. Well, it got a little cold and a little too bright to sleep, but it was pretty rip roaring time there.
Absolutely. Where was that again? I'm sorry, it cut out for a split second.
Oh yeah, it was like Norway, like
Oh, Norway.
Alisund area. So we were just yeah,
That's so cool.
beautiful
Wow.
country.
That's awesome. All right, so let's dig into your investing philosophy, your strategy a little bit more. I mean, firstly, are you still covering freight transportation stuff right now, or have you kind of transitioned away from that? And if so, why?
I mean, I cover freight transportation, but not really recently. You notice, I do apologize if there's anyone's a sub to my Substack. I know it's been very cobwebby there. So, and the reason I kind of started it is I do have this background freight transports. I do love the sector. I find that ultimately, I guess I'm more interested in investing. And between investing and working a full time job, there's not that much time in between to write a Substack and in the way I wanted to, especially dedicated time. But I mean, I still really love the freight transportation space. I think it's super interesting. It's interesting because I think also it's like certain industries are accessible as a consumer. Like for example, Apple, you can kind of just pull out your phone, test out retailers, etc. Whereas transportation is like this B2B thing, where it's kind of like you to really like get involved, you have to actually like talk to people, get out there and talk to like shippers, truckers, etc., and really understand the industry. But it's still super interesting because it's like a lifeline to the physical economy, and you can kind of divine things from there. It's actually recently very interesting because you can kind of see a drop off in like import freight volumes. I've been chatting with some people off and on, and like, yeah, this is super interesting. You can kind of see the fundamentals, at least the fundamental side, kind of deteriorating in transportation world. So that's kind of why I'm doing that. I changed to microcaps because I'm more like I love to invest, and my primary objective in finance is more to necessary to like invest and find good stocks, make money. So that's kind of why free transports took a backseat there.
For sure. But I mean, to be fair, at the time you started it, what was supply chain was probably the biggest word or phrase being thrown about, when it comes to excuses and not okay. That actually was a real problem for people. I'm not saying it was an excuse for everyone, but for some, but like that. So covering the space during that time, especially, or making public some of your thoughts on the space and what's going on, picked a pretty good time to really put your thoughts out there on what's going on, especially as supply chain. I mean, still continues to be an issue today.
Yeah, for sure. I mean, I kind of wish I had another copy of me to kind of keep up to speed. Yeah. I also realized that I also like personally, I'm a kind of a capital cycle tourist. We can cover that a little later, but I prefer when things are almost on a downswing, like a trough areas. Like I like to find things where things are ignored and forgotten. And as of a year ago, 2 years ago, there's just in transport. I don't short, so I was like, well, transportation is red hot. I don't think it's gonna continue forever. Maybe it'll take another year or so, and then I just wasn't. I also lost interest in that sense. It was like everything was just basically red hot, and the question was how long was it going to last and how high it was going to go.
Yeah, absolutely. I mean, hey, you want to talk about troughs, just microcaps in general, like throw a dart at any sector right now, microcaps, and we're in a trough.
Yeah.
Right now. So then, I mean, when you're looking at using that background for now, in freight transportation, what does that ideal investment look like for you? What were some of your criteria?
So ideal investments it's interesting. I guess Old Dominion, I don't own, my parents do, which I help direct them a little bit. But that's like the kind of like I think the business I just absolutely love. It's basically it's a physical network. It's not just a network effect. Like there's marketplaces out there that are beautiful, high returns on capital, etc. But it's kind of hard sometimes to keep your competitors out because if you have a really good business, everybody's like, oh, that's a fantastic business. I want to compete. The beauty of like the Old Dominion model is because there's a physical element, there's a real estate element. You have to basically find warehouses so you can consolidate the shipments in. You can ship it cross country, break it up, and then ship it to the various parties on your destination. And because of that physical network, like you kind of need the physical network. You need a warehouse to convince shippers to give you business. And at the same time, you need business to convince yourself to make investments in the real estate. So it's just a beautiful model. And that's why, you can look over time, the gross margins expand over time, their operating margins expand over time.
Very good.
So that's my favorite.
Fair enough. All right. So, you also mentioned that you like hunting where there's troughs right now. Obviously, freight and transportation is kind of there as we speak, but what other sectors do you see are there right now? And what are some of your criteria for those areas that have been kind of piquing your interest?
Yeah. So, it's kind of hard. Like energy for a while, I was curious about, but it seems like it's caught like more attention recently. So maybe there's still some ways to go because it's just for a long time we're just it's interesting because you look at energy consumption, it just like people are talking about renewables, but like you can see like the oil consumption, everything is just going like increasing, like even as we're expanding renewables. In an ideal world we can figure out storage issues and we can go to renewables, but it's a fact of the matter is we need energy and we'll probably need more of it as the world hopefully keeps on getting richer, especially the developing world. So that's the one sector I was interested in. I guess I'm still kind of sitting around holding some of that. Recently, I'm taking a look at some financials. I think financials are interesting. I wish there was more of a capital cycle story there, but I guess in my mind, there's some winners and losers to higher interest rate environments. And it's like with the financial, it's like it's a spread business. So the question is like what percentage of your assets are floating versus your fixed, and then also your liability. So potentially there's going to be some that do really well and potentially some that, don't do very well at all. But I find financial is also an interesting sector to dig in.
Very cool. All right. So then what is your process? Let's say you find something that's interesting, you want to look a little deeper, what's your process to then when you size it up into a full position?
It kind of depends. I'm kind of like it depends on the company. Like I kind of like just like to look in general, like to understand what the business looks like. Like the 10K, the MD&A is almost always like the first step. And then the second step is usually I pull up ticker and take a look at, what the fundamentals look like, the margins, returns on capital, intensity, if there's lots of debt, etc. Try just to get like a really long dated view, see what happened in recessions, last downturn, see the cyclicality of a business. So between the two of them, I think one, understanding the business, trying to like form the qualitative, is this a good business? Is it a bad business? It should be capital intensive? Do I expect them to be able to borrow at low rates, or like should they even have a lot of debt? And then comparing that, the business description and like kind of my prior framework for the business with the actual numbers. And then that's kind of where it starts. And from there, it can go a billion different directions. Sometimes I talk to management, as very quickly. Sometimes I never talk to management at all. Sometimes I dive in and look at parts of the balance sheet and try to understand the assets, liabilities, etc. Sometimes I look at earnings power. It really depends on the business. So
absolutely.
But yeah, that's kind of the start, and then the scale up is as I get more comfortable. I go, hey, I think this is a great idea. I want an outsized stake in this company.
Sure thing. So like I said, we've at the beginning, we've been to a number of microcap conferences together. I think we've sat at a few tables together where we've asked management teams a few questions and a little bit of some grilling. So yeah, right. So, in your opinion, what are how often do you like to talk to management? How do you like to approach them when, this is a company that you're looking at as for potential investment?
Oh boy, you're trying to get all my secrets. That's okay. Yeah. So, when I do talk to management, it really depends. I think like I don't talk to them that much. Like probably one out of every 3-4 investments I talk to management. So I'm not often like what I do. It's like, it's really two things I'm trying to ascertain. One is like I want to understand like what they're going forward. Two, I just want to like validate what they say. Like, for better or worse, like we're all salespeople. Like we all talk about, talk a nice game and talk about like our company's going up and to the right, like our portfolio, etc. And when in reality, it's funny. Like you look at even my own sell side models. Like you can look at like a few years down the road. You're like, oh wow, well, I guess I missed. I was too optimistic in my projections. So it's really just to ascertain, what management thinks and how to explain some of the choices they made and try to figure out if the numbers are make sense. If sanity check against what they say and try to figure out if the future prospects are as bright as many management teams want you to believe.
Absolutely. So what would you say is an investing experience that really changed your career the most? Like what? Tell me.
I think I can't remember a year anymore, but it was an interesting investment. I think, well, first I read Joe Greenblatt's, you can be a stock market genius. I think that's popular. And then I was just fishing around. It took a few years before, I think a year or so before I actually landed on something that was super interesting. There was just this odd, like, company called Armar Group. I don't own it anymore. No ownership. But basically, what happened was it was a bunch of REITs, and they decided to distribute the management company via their REITs. So you have a bunch of REIT owners who are owning something for income in like a different tax structure, and they spit out basically a C corp to pro rata to their underlying REIT holders. And I was looking at it, I was like, well, one, that's a really weird transaction because like even today, like if you look at like historical record of spinoffs, it wasn't like technically a spinoff, but in theory, like it suffered from the exact same like spinoff like dynamics. Basically, it was basically immediately an orphan security, and you look at the earnings and you backed into it. It's like, wow, this thing's at like 8 times earnings, and it's a management company, and like there's no capex, there's barely any capex. So like this should at least be 14, 15, 16 times earnings like immediately. And yeah, so that was like the first like experience. I was like, wow, well, one, I can actually find these things. Two, these things inefficiencies do actually exist, and that kind of sparked the moment. Because before I was like, yeah, there's like this book theory. It's like, yeah, you read all these things, you do all this work, and can find these inefficient situations. But I was like, yeah, but really, can I do it? And that was kind of an aha moment. Going, hey, actually, if you do the work, sometimes things literally do fall out of the woods and are like home run type opportunities.
100%. That's a great story, man. Has there been one experience that you really, learn the most from? I mean, most often that's usually been a negative experience. And if it is, you don't have to name the name if you don't want to.
No, all good. I learned from BlackBerry was like I invested that back in the day, back when like Apple started making inroads on their business. Yeah, as you can see, it was a bad idea. I bought it off trailing, PE, like PE trailing PE was like 6, 7, 8. Obviously, I think I probably should get more like update my to a more recent one because that's a pretty basic lesson. You should buy on future earnings, not historical, basically. And I don't own BlackBerry anymore, obviously.
Very cool. Going back to our freight transportation, conversation here. And I know you said it's been a little bit since you've been kind of up to getting yourself more up to date, but without having done maybe some more deep dive research and seeing, maybe how things are responding or what the basic sentiment is right now. If you had to guess, what would you say is the sentiment right now, and how should folks be really thinking about freight transportation sector, do you think?
So I think the first thing to know about freight transports, and I think one of my for my like person that managing directors at one of my older Southside firms was saying that freight transport is a very early cycle. It's extremely early cycle. It's so early cycle, and his comment was it's so early cycle that in some sense you look at it like it looks like it's late cycle, like it starts turning before anything else. So the thing is right now fundamentals are obviously pretty like that's what I do know is fundamentals are pretty awful. Like you look at any metric, whether it's inbound freight off of West Coast ports, you look at trucking, its rates, the numbers don't look good. I mean, a talk obviously doesn't look good. There's always also this thing called the bullwhip effect, which is super interesting because basically it just says the further up, like small change of demand in the downstream set, like the very downstream on the consumer side, like if you go up the stream, it can lead to very, very big like misprojections in like the supply chain. And what basically happened was you look at 2020, 2021, because there was so much money going into the system and everybody was sitting at home, basically everyone bought a crap load of goods. And people, businesses of all sorts were like, wow, this is great. We're going to grow like at like 5-10% forever or something like that. Or maybe not, but like they just projected for like this huge ramp in demand. And then I guess predictably, like you kind of the next steps is you over order. And I think it's telling if you look at like Target, which I don't own. I think they commented that there was like they were over inventory in like first quarter, and they're like one of the, in my opinion, it's like one of the sharpest sharpest on the supply chain. And if they like misjudge demand, you can kind of imagine like what the rest of the world did. So that's kind of what's happened. So the tail end of bullwhip is basically people are like, wow, we ordered all this stuff, and people weren't actually that enamored with like exercise bikes or something like that. It was just a one-time type of thing. So yeah, so that's kind of like what their sentiment is. But that said, stocks are different. Stocks are not the economy, so the stocks can start increasing before the fundamentals. You see the bottom there.
Absolutely. Well, because if we start thinking about this, because it's almost like, and please, I'm not an economist, so please don't come for me in my DMs or anything like that. But it is almost like a microcosm of what almost like a consumer sentiment index, right? When you look at freight and transportation, in a sense, because well, especially nowadays, because it's just very well accepted that people tend to buy more online at this point. So as a result, they got to ship the goods. They got to get to the people. So it's interesting when you think about it right now, we're kind of in this recessionary type environment, maybe discretionary spending isn't as high, and yet people are still buying and ordering things online at maybe not the same clip we were in 2020, but how do these types of companies react and plan for these things? Because that just seems like a metric and a calculation that, I don't know, maybe Einstein can figure it out, but I don't know how even those folks within these businesses calculate that. I'd love to hear your thoughts there.
Yeah, unfortunately, that's where like I can't talk. That's more practical. Like right now, I'm pretty theory oriented. Like, I mean, you obviously have to predict. I think what's interesting. This is a hypothesis of mine, to be clear, so I'm not sure. Like supply chain managers are generally fairly risk averse. Like the last thing you want as a supply chain manager is to be pulled into front of your C-level execs and have a CEO go, you're like, seriously, what the heck's going on? Like, why? What do you mean we're not going to get our inventory by Christmas? And I think that's what happened in 2021. And I wonder if this year people are like, well, that was a terrible experience. I don't want to do that. So like by all means, like whatever the heck happens, I want to be sure I'm early this year and avoid the year-end crunch, avoid having to explain to my CEO why the heck we don't have enough inventory for Christmas. So I think that also like plays a part. So you can see kind of supply chain managers, they try to predict as much as possible, but at the same time, I think everyone, and I think that's also super interesting if you look at it from a broader lens as well. I don't want to completely go off on a rant, but to see the human like implications where you kind of say, we have to make our best prediction, but at the same time, I also don't want to, I want to preserve my job. I want to look like I'm competent, etc. So I'm going to lean towards one way or the other, just because I just don't want to look like, maybe rationally I should do something else, but I just don't want to look bad or something like that. So I think it's super interesting there too. But the short answer is I'm not really sure. So
yeah, well, I mean, look, I don't worry. I wasn't asking you to come up with the actual calculation itself, because I think between the two of us, like I think we're okay, brain power wise. I don't know if we're there, but I mean, at the end of the day. For those listening to audio, Vanck agreed. He shook his head. It's in agreement here. But it's just very interesting to kind of understand. If you're kind of looking, I mean, it's obviously cyclical, right? It's a cyclical industry. We're heading into we're in the holiday season right now, so clearly there's even more goods being shipped and more things being ordered. I mean, is that one way that some folks kind of play it? Is that they're like, all right, I'm going to look at this industry come summertime because I know that the hockey move is going to go up, all these orders are going to come in, and then and then is it out in January? Like how do most folks tend to play this sector?
I mean, it really depends on like how fast your money is. So some guys play quarters. I mean, I'm no, I was never fast money, so I was always on the sell side, or like in like more of a distress was a longer term thing. So I mean, the way I look at it is, a lot of this stuff, you can see that there's a ramp. You expect that there's a peak season, July, August, September. I think it's August. I'm not even sure what the months are anymore. But ahead of like basically Black Friday, you can see that there's a pickup in demand. Also back to school, but those are all like expected. So like the game they're playing really is where it is relative to expectations, because a lot of people can expect. You can't really make money if everyone expects something to happen, because then you just pay up a little bit more when things are quieter in the summertime, and then once you see a ramp, you're like, okay, that's where we kind of make our I'm forgetting make our money worse there. So it's more like trade versus sentiment. You can do that. Alternatively, you can also just say look through what you want to kind of do now. I'm like, look at all these businesses. Some are really good businesses. So yes, next year is going to be rough, and maybe we get a sell off. But if you look at long term, some of these are really good businesses, and if you hold through, long term, the stock performance basically converges to your underlying business quality, returns on capital, etc.
Absolutely. So, I mean, last question on the freight transportation side of things. You mentioned Old Dominion already. On the have there been any in the microcap side that, not necessarily naming the company or anything, but what are some criteria that you really hone in on when it's microcap freight, especially shipping, right? Shipping that was all the rage. I feel like what was that, last year, somewhere in that August timeframe? Love to hear your thoughts there.
I've actually never bought a microcap transportation company. To me, scale makes a difference here. Like Old Domain is a scale play. Like you need the national network. Even the brokerages that I like a lot, like where they match basically a guy with a truck with a shipper. That's also to some extent a scale play. I mean, most of the companies are, and then there's companies that provide resources to, like the independent agents. Landstar, which I don't own, I wrote about. Actually, all of their agents are small businesses, so I don't know if that counts. But the business itself is not it's like a mid cap ish. But so yeah, so I don't really touch that. My microcap's much more like esoteric one off. Like these are random companies that don't really fall into any neat boxes.
Gotcha. Did you look at shipping at all as well as part of this ecosystem of companies or basket of companies?
So I have to look at shipping because I looked at like stuff like I don't own any on these either, Expeditors or like C.H. Robinson even. But I don't really I've looked at it. I don't really love the businesses because they're really like competition is rough, and I guess a fundamental dynamic of like a shipping company, like boat company in my mind, is the solution when you have a lot of competition is, well, if we get a bigger boat, we get 50% bigger boat, we can reduce our cost by, I don't know, 10, 20%, which is great if you're working like in like a monopoly or duopoly situation. But when you're in a very competitive market, what ends up happening is like basically 5 years down the road, you realize that everyone has the old boats and also the new boats, which are 20% bigger. So therefore, like pricing doesn't really pricing kind of just downshifts, and you don't really get any cost savings because everyone else got a bigger boat and you don't really have competitive advantage. So to me, like shipping, I just never really got comfortable with that kind of like those dynamics there.
So Vanck, to close us out here today, from your experience, what advice would you have for folks that are just starting to look at, the planes, trains, and trucks sector right now? How should they think about it? How should they evaluate it? And what are maybe some things that are red flags that they should really know about as well?
What should I know about right now? I mean, it's I think it's out of a lot of sectors I looked at, I think that's one sector where you should get on the ground, like just talk to people. Like it's again, it's not like a lot of industries where you can kind of walk in, test the product out. Unless you are a shipping manager, it's kind of like this thing goes behind the machine almost. And you should try to understand and talk to people, truckers, shippers, etc., to understand the underlying business. That's probably one recommendation. The other is, just to recognize that there's, the underlying dynamics. Like it's interesting to think of freight transportation as kind of a monolith, but really, like as with any sector, there's differences. There's There's businesses where there's duopolies, monopolies, like rails are duopolies, for example. We didn't even talk about that, but and then there's other sectors like trucking companies where there's literally like hundreds, I think thousands of small trucking companies throughout the United States competing against each other. So like depending on the sector, you end up like they're all driven by the same like underlying macro factor of like shipping, domestic demand, etc. But if you look at the individual industry, like how they like trade, they can be very, very different depending on where you end up in the subsectors.
Very good. All right, well, Vanck, we're there, man. With that, where can our audience go and find more information on you, follow you on social media?
Sure. I mean, I'm on Twitter for my investment folks. I'm on Twitter, VANCKZHU at Twitter. So that's probably the easiest way to get to me.
Very cool. Well, Vanck, dude, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I look forward to seeing you at an event soon.
Yeah, I'm going to drop by one of these days. Las Vegas?
Yeah, Vegas, man. Hop on a truck, get out there, or a train, or a plane.
A truck, or plane. Yeah, plane's definitely preferable. Cool. Well, this has been a blast, Bobby.
Thanks, man. Talk to you soon. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.